quickly, we are going to do the current accounts in the SFP together with the trade and other payables. We are doing this for the partnership owned by Partners Gold and Brown, and this is for the year ended 28 Feb 2025. So first of all, go to your answer book and ensure that you have completed the details within your current note, so you know exactly what it is that you are looking for. But first of all, let's just quickly understand this current account. So, profit per statement of comprehensive income, that is your net profit for the year. So you now need to take that net profit and you need to distribute it between your two partners. First of all, you are going to give them their primary distribution. Primary distribution consists of salaries, bonuses, and interest on capital. So you are going to say that these are the amounts that I definitely have to distribute to my partners before I can say that I'm going to give them their final distribution, which is then that ratio that they'll give you, or it is the amount according to their capital contribution. So primary, it's your starting point with the distribution of profits. Once you have now distributed that to each one of the partners, you're going to hopefully still have some profits left and not losses. But then the final distribution happens when you take that net profit minus the primary distribution. You will then allocate the final distribution to each one of the partners. Then it might be that the partners decided to already withdraw some of their earnings for the year, and you will then subtract that. So primary plus final distribution is equal to the partner's total earnings. Subtract from that the drawings that they had to see how much they retained. So how much of their earnings for the current year did they retain in this account? Add to that their opening balance minus their balance at year end to then see what the amount is that we will show in the SFP. Then trade and other payables. Trade and other payables is everything that this partnership has to pay to third parties apart from your long-term loans. So that includes your creditors. Then I already went to the information here, and I already looked through all of it to identify my trade and other payables. So starting with my creditors, so trade and other creditors. Then accrued income is a receivable, so that will not go to my payables account. Accrued expenses, amounts that I should have paid that I haven't yet, so that's obviously a trade and other payable. Prepaid expenses, I've paid in advance. That is a trade and other receivable, so not in my payable note. Then we have income received in advance. So we owe this person something. We either have to give them their money back or we have to give them what they paid for. So we owe them something, therefore trade and other payable. Then we have an overdraft for the bank. So we will show that on the face of the SFP. There we have some cash and cash equivalents. Loan is a non-current liability, so not in my trade and other payables note. And then creditors for salaries, the amounts payable to employees. And then SARS pay-as-you-earn payable to employees. So there we see those in our note already. Then if we want to now do our partners, their current note, let's quickly look at the information that's relevant to this note. So we have capital for both of the partners. That is extremely important because we need to calculate interest on capital. So I'm going to say here capital. I'm going to say the one is for gold. He is on 500,000. And then I also have Brown, and he is on 300, or she. I think it is a she. Then it says that the current account of gold on the first day of the current financial year, remember your year ended 28 Feb 2025, which means that it started on the 1st of March 2024. So he started on 33,000 Rand. Then partner Brown started on a debit balance. So that means a negative balance. So it means that partner Brown withdrew prior to this financial year more than what she actually earned throughout the years. So that's why it's in a negative. Partner Gold has drawings of 12,000. That's already there. And then Brown started here on drawings of 10,000, but it might be that she had additional drawings. So I just for now included that as a calculation. So that's everything that we need for our notes. Moving on. Additional information. So 75,000 Rand of the fixed deposit will mature on 30 June 2025. In other words, 75,000 Rand of what you see in your fixed deposit here, there we go, will next year no longer be part of the fixed deposit. So you have to reclassify that as cash and cash equivalents. So it will no longer be the full 225 in your fixed deposit. It would be that minus your 75, because remember, any fixed deposit that's going to mature within the next 12 months, meaning within 12 months after your financial year end, that then becomes a current asset in your cash and cash equivalents. We aren't doing that now. I'm focused on the two notes here, not the SFP. So we are going to ignore that for now. Then 60,000 Rand of the capital portion of the loan will be repaid during the next financial year. Once again, same as with the fixed deposit, anything that is repayable with regards to the loaner, if it's repayable within 12 months after my current financial year end, I have to remove that capital portion from the loan. So if I go to the loan here, so 60,000 Rand will be deducted from that 480,000 in the non-current section. And I will reclassify that as a current liability on the face of my SFP to say that this is the current portion of my loan. Then Brown took stock for personal use. So whenever one of the partners takes something for personal use, it has to be debited to their individual drawings account. It's very important that you take it to the specific partner's account. If you think, for instance, we can ask you to do the accounting equation, then you have to indicate that it's drawings, Brown. You can't just say drawings anymore. Then says that the price of these goods reflected 6,900 Rand. So that's the price of the goods. And the markup is 50% on cost. No entry was made in respect of this. Okay, right. So that means that we have not yet recorded this transaction. So we must now go to partner Brown. Just want to get my calculator here. There we go. We must go to partner Brown and we must now indicate that partner Brown had additional drawings. So I'm just going to quickly copy this to my answer book because my calculator is doing weird things. It's disappearing there. Okay, right. So there we have it. Partner Brown is taking goods. I just quickly need to pause this. Just give me a moment. Okay. Right. So we are busy with this partner Brown that took stock. So the price of the goods reflected 6,900 Rand. In other words, the price at which we wanted to sell the goods was 6,900 Rand. So they didn't say the cost of the goods, they said the price. And remember, the price is what the customer is going to pay for it. We know that whenever partners take stock for personal use, they do that at cost. Therefore, I now have to go and let me just make this a bit bigger. I have to calculate my cost of sales. You should by now be able to calculate cost. Okay, so it's the selling price times I want the cost. I'm working with the selling price, so it's 4,600 Rand. So partner Brown no longer has drawings of 10,000 Rand only. She has drawings of 10,000 plus the 4,600. So in other words, 14,600. I'm for now just going to leave it as is, and not enter it into my note because I don't know if she had any other additional drawings. Then Brown increased his capital. I was pretty sure it's a she. Mary Brown, yeah, so she. Partner Brown increased her capital by 80,000 Rand halfway during the financial year. This has been recorded properly. In other words, the capital balance that we see here, oh, not there, there, that we see here, that is after the additional transaction for the current financial year. So in other words, you now first need to go work back to see what the balance of this account was on the 1st of March 2024. And that was for 6 months in the current year because they said that she changed it halfway during the year. So for 6 months, she had the one balance, and for the remaining 6 months, she had the balance as per the trial balance. So if we look at the capital here, this is her year-end balance. So year-end, which means that if she increased her capital by 80,000 Rand during the year, her opening balance was 300,000 less 80,000 Rand. So she started on 220,000 Rand at the beginning of the year, and then she added on to that 80,000 to get to the 300,000 Rand balance at year end. The reason why we're working back is because it says that this has been properly recorded. In other words, in your pre-adjustment trial balance at the moment, it already includes the additional capital that she contributed. So that part is extremely important. Right. They didn't say anything about gold, so that means that you have to make the assumption that gold's capital remained unchanged throughout the year, unless they are now going to tell us otherwise in the adjustments that follow. Next up, gold receives a salary of 11,000 Rand per month. Just going to stop there because per month. We are doing the financial statements for a full financial year. Therefore, when we're looking at salaries, we want the annual salary, not the monthly salary. So 132,000 is the salary then for gold. Then it says that he also gets an annual bonus of 12,000 Rand. So we will go to his current account and show that he also gets 12,000 Rand. Okay. Next, Brown's annual salary. So see, there we go. Annual salary is 108,000, and the answer book already had that. If they don't tell you anything about a bonus for the other partner or for none of the partners, then it means that no one gets a bonus. In this case, gold gets one, Brown is not getting a bonus. Okay, then partners are entitled to 10% interest on their capital investment. In other words, the partners earn 10% per annum on their capital. Gold had the same capital for 12 out of the 12 months in the current financial year. So 10% thereof is 50,000. Then, hang on. There we go. Then if we're looking at Brown, she had the one capital balance at year end at 10%, but only had that capital balance for half of the year. And then she had a lower capital balance for the other 6 months during the current financial year. So she had the 300,000 times 10%, but for only 6 out of the 12 months, so 15,000. Then, prior to that, she had 220,000 Rand in capital. Oh, wait, it's doing something right there. 220,000 Rand times 10%, but only for 6 out of the 12 months, so 11,000. So in other words, her total interest is the 15,000 plus the 11,000, and that then amounted to 26,000. Okay, so you need to just make that split. How many months did she earn on the one capital balance, and how many months did she earn interest on the other capital balance after she then increased her capital. So 50,000 for gold. And now you must just remember to put it under the right partner's name. Please don't mix up your partners. And then 26,000 for brown. So in other words, for this financial year, Brown earned a salary plus, what on earth is going on here? He earned a salary plus he earned a bonus plus he earned interest on his capital. So 194 primary distribution before even looking at profits. And then Brown had the 108,000, no bonus, but together with that interest on capital, so 134. Righto, so that is your primary distribution. Now we move on. Goes further to say that remaining profits and losses are shared between gold and brown in the ratio of. So I'm going to write this here. 3 for gold, 2 for brown. In other words, in total, we are going to take the profits that remained after the primary distribution, and we are going to split that profit into 5 portions because gold needs 3 portions and brown needs 2 portions. So that 3 plus 2 is equal to 5. Right, so let's look at that calculation. We first need our profit. I'm too excited. Let's just stop. So the net profit for the year after all the adjustments was 400,000 Rand. So in other words, we need to take our 400,000 Rand. Please don't, this does not go into the note now. This is just for explaining purposes. So we need to take the 400,000 Rand profit. Then we first need to deduct from that the primary distribution. And then only can we do the final distribution. So just to make this easier to see, I'm going to do the calculation here. So I'm saying that 400,000 is the total net profit minus the 2 primary distributions, because I first had to distribute those. So it is my 400,000 minus the primary for gold, minus the primary for brown. So I still have 72,000 Rand that I can now distribute. So this is my profit after primary distribution. So I'm going to take that 72,000 and I'm going to divide that by 5 to get my 5 portions. So 72 divided by 5. So each portion is 14,400 Rand, of which 3 is going to gold, and then 2 is going to go to brown. Okay, so 3 to 2. So I'm going down, and I'm saying that for gold, 14,400 times, vowels, 14,400 times 3, and now my battery is going to die. 43,200. Final. There we go. And then also 14,400 times 2, so 28,800. So if you now add your primary and final distributions for both your partners, it has to add back to the 400,000 that you had as a net profit in your SARCI. Right, so that means because we are now done with all of the adjustment, it means that the drawings that we calculated for Brown, the 14,600, that is indeed then her final drawings for the year. So primary for gold plus final for gold minus his drawings equals his retained income for the year. So that's what he did not withdraw. Then we also had at the beginning of the year for him 33,000. So we are adding that on. We're not forgetting about what he had last year. So he's ending on a balance of 258,200. Then for partner Brown, primary earnings plus final earnings minus drawings. So retained income of 148,200. of which she had already taken 15,400. Oh no, the 15,400, my bad, opening balance. So she took more out of the account last year than what she actually earned. So minus that to see what she ended on the end of the year. So 132,800. So in the SFP itself, we will then add these two amounts to see the amount that will be in the current accounts on the face of the SFP. I'm just quickly going to pause this so that I can just get my charger. Okay, there we go. Okay, because the reason why now I've just had to stop real quick is I still have to look at the trade and other payables. So trade and other payables in this case was way too easy because we didn't have any adjustments where we now when we read through it, you would have then noticed we don't have any adjustments that will affect our trade and other payables. So therefore, whatever the amounts were that they gave us in the pre-adjustment trial balance, that is then also the final totals for these accounts. So we can double check. So we said fixed deposit is non-current asset that is being reclassified as a current asset. Current portion of loan is a non-current liability being reclassified as a current liability. The owner, one of the partners took stock, and we said that that partner's drawings is increasing, meaning that we have less trading stock. Brown increased her capital halfway throughout the year. This has been recorded. We only needed that to calculate our interest on capital. Then we have the partnership agreement. That's for the current note to determine the earnings per partner. And then we have our net profit for the year, which we needed to be able to calculate the final distribution to our partners. So that is why we can say that these are then our total amounts, 65 plus 31 plus 8250 and 45,022,500. So this is the amount that you then want to see in your SFP for your trade and other payables on the face of the SFP. And that is it.